Hi, I'm Alan Donald with Keller Williams Realty. I've been selling homes here in the Charleston area since 2004, and in all those years I've come across many people who are challenged because their credit is not that great. So today we've invited an expert on credit repair, John Santos from Second Sunrise Credit Repair Company, to talk about some of the most common questions that people have when it comes to credit repair. Welcome, John.
Well, thank you, Alan. I appreciate your invite today to talk a little bit about credit and some of the things that affect credit and how we might clean up people's credit, because that's what my partner and I have been doing for about 9 years. And it's our goal to help them get where they can buy a home.
Okay, great. Well, let's dive into it. So, John, to get us started, why don't you tell us how long does it take to repair your credit?
Sure, that's a great question, Alan. The process really varies very much upon the individual situation. There's some clients who may only take a couple months, and then there's others that may take a couple years. And it really depends on a variety of things. One is how many derogatory items they have on the credit report, the types of things that are on the credit report, many positive items they have to offset the negatives that may be on the credit report. And lastly, we sometimes have to look at their debt utilization, make sure that it's being well managed. And finally is how committed they are to making sure that their credit gets to where they want it to be.
Okay. Well, going on that, derogatory means bad, right?
That's correct. That's correct. Negative items that are on the credit report.
And credit utilization means what?
Debt utilization is when we look at somebody's credit, they look at how much available revolving credit, which would be credit card debt, you have versus how much your limit is. And in a perfect world, you want to keep your debt utilization ratio 30% or less of the available limit. When it exceeds 30%, it can actually start dragging as an anchor on the scores, even though you're making all your payments on time.
So to give you an example, if you have a credit limit of $1,000, you shouldn't be utilizing more than $300.
Exactly.
Okay.
Exactly.
Can anyone repair their credit on their own, or do they need professional help?
Everybody has the right by the Fair Credit Reporting Act to appeal anything that's on their credit report that they don't feel is accurate or that's derogatory. To do so, however, can be very, very time consuming, and it can be very frustrating. So there are businesses like mine that are there to provide the guidance, the professionalism, and the experience to help those individuals do what they may not be able to do on their own, or that they get frustrated trying to do.
What are the most common mistakes that people make when trying to repair their credit?
Well, I think first and foremost is not knowing what their credit looks like. So it's important to take a look at your credit periodically and look at all three of the major credit bureaus, Equifax, Experian, and TransUnion. I recommend having a credit monitoring service. That's what I use, and there's lots of them out there. You can do it very inexpensively, and it helps protect you from identity fraud as well. The second thing, and the biggest thing, is you need to make your payments timely and on time. If you know you're going to be late on something, then just communicate, be proactive and communicate with the creditor. Because a lot of times if you are letting them know, hey, I'm going to make this payment, please work with me, they will not report you as late. And they shouldn't report you until it's at least 30 days late. Another thing to keep in mind is there are three different types of credit that the bureaus look at. One is a mortgage, which is basically where you take out a loan to purchase a home. A second is installment loans, which would be your personal loans, your auto loans, your student loans, where you borrow X and you're going to pay back over a period of time Y. And as long as you make those payments on time, everything's good. The last is credit card debt or revolving debt, and that is treated differently. There, the debt ratio that I talked about earlier is very, very important. So it's important to manage those cards and make sure that you don't overutilize the cards in terms of how much you use versus how much your limit is. Another thing to keep in mind is you have to have enough active and open accounts to show the bureaus that you're a good risk. Sometimes people close all of their credit cards or all of their accounts thinking they're doing a good thing, when in turn it shows the bureaus, it makes you an unknown to the bureaus, and the unknown scares them, so your scores will drop.
That's interesting. That reminds me a time where I had a client who had been qualified for a loan. They were building a new house, and a month before the closing, he decided to co-sign for a car loan for his son. And he thought because his son was paying that debt,
Yeah.
that it wouldn't count, but it was on his credit report, and that kicked him out from qualifying for the loan. He could not buy the home. So it's very important to understand that different types of credit affect your credit in different ways.
Absolutely. Yeah, that one is one that I see happen a lot of time. People co-sign to help a friend or a family member, and it's the old saying, no good deed goes unpunished. Way too many times it comes back to bite them. So what I suggest to people is don't ever co-sign for something unless you're willing to make the payment, and then they pay you, because they won't default on you, but they will default on that payment.
Right, okay. John, does working on your credit or hiring a credit repair company really improve your score?
Well, absolutely it can. It is important, obviously, to make sure that you're either doing the right things or your hire company's doing the right things. But by removing the negative items and building new positive trade lines, it absolutely will improve your credit score. On average, our normal client is going to improve their score by about 100 points in 6 to 8 months. We've helped some clients improve it by as many as 350 points to reach a goal, but that was a long-term process.
Right. But they still have to keep doing the right things all throughout.
Totally. It's not just what we're doing, they have to be committed, stay on top of their current bills, and if we advise them they need to open a new secured credit card, say, to establish a new positive trade line, we need them to follow through and do that, and do it in the way in which we teach them. So it's a matter of coaching and consulting, and them having the fortitude to stay patient and follow through with what we're advising them to do.
That makes a lot of sense.
Yeah.
John, like with any industry, we hear about great credit repair companies and not so great credit repair companies. Sure. If someone is looking to hire a credit repair company, what kind of questions should they ask? What are they looking for?
Yeah, that's a really good question, Alan. In our industry, like many, I guess, there varies a lot in terms of the quality of the service you get. Some of the things that you want to definitely look for are, you want to make sure that companies aren't asking for money up front. In fact, in our state in South Carolina, that's a no-no. Secondly, you want to make sure that they don't overpromise and underdeliver. You can do that by checking to see if they've had any testimonials or any types of the website, that talks about critiquing them and their service. And then the biggest thing is if you have a person that recommends you. We don't advertise our services in any way. Everything that we do for our clients is through referral partners. Those are mortgage lenders, realtors, bankers who, when they pull the credit and they see that somebody has a problem, they refer them to us because they know that we get good results. And then the idea is that we then send them back so that they can then buy the home or get the loan that they couldn't do otherwise. And so it's really a win-win situation.
John, I'm sure that anyone watching this video will want to ask this question. How do you get paid?
That's a great question and a fair one. We have to get compensated like anybody. And so what we do is we do a no-cost consultation to determine if we can help. Because again, most people refer to us. So we pull a tri-merge credit report with the individual. We can do so for $1 through the credit monitoring service that we use. We go through that line by line to analyze the report and to see what derogatory items may be on the credit report and how they're using their current credit. If we think we can help them, we'll let them know. If we don't, they don't owe us anything, and we'll give them some free advice. If they choose to hire us at that point, we then do, we charge a one-time setup fee of $99 to cover the cost of what we do in setting up a new client. And then we work for them first. Each month we work for them, and then we bill them in arrears a fee of $75 per month. So it's really fairly inexpensive to get the help you need.
And it might save you thousands in interest. When your credit scores go up, normally your interest rates go down, right?
Absolutely. There's no bigger thing in terms of purchasing a home or a car, which are obviously major purchases, than your credit score. It can save you thousands or tens of thousands of dollars over the course of a 30-year mortgage.
How do you or Second Sunrise, as a professional credit repair company, specifically help your clients achieve their financial goals?
So, first and foremost, a credit score is a confidence meter. And so what we're trying to do, it's an algorithm, it's a formula. So what we're trying to do is remove any derogatory negative items while we're also adding positives. And if we can do both those things, we can get the score where we need it to be. We do that by sending what we call legal demand letters challenging anything negative. And it can be a charge-off, a collection, a repossession, medical bills, any type of thing that's negative, even when the client admits that it's their own and they agree that they do owe it. We a lot of times can get them to remove it because we send a legal demand letter challenging it. They have to prove that they do owe it. A lot of times they don't have the documentation. In that case, they will have to remove it. Or sometimes if they have an error in how they report it, an amount's wrong or a date's wrong, it's a technicality, but again, we can make them remove it for that reason. So a lot of the negative things will come off by sending these legal demand letters. Medical bills we can approach with a HIPAA letter related to HIPAA laws, and they worry about a HIPAA violation, and so a lot of times they'll remove the medical debt because it really shouldn't be on there to begin with.
Interesting. Another question that I get all the time is how long do these bad credit reports or derogatory credit reports stay on your record? How long do I have to wait until they come off?
Really varies depending on the state you're in, but most states, a normal derogatory collection, charge-off, repo, etc. is going to fall off. It won't just fall off, but it can stay on for up to 7 years. Usually needs a little shove off even after 7 years, but they absolutely can stay on 7 years from the date of last activity, not from the date you opened the account. So when you made your last payment, 7 years from that date. Public records, which would be bankruptcies, judgments, etc., can stay on up to 10 years.
John, you mentioned there public records. What type of credit activity is public, so for anyone to see?
Yeah, that's a good question. So when you look at your credit report, there are 4 distinct sections. First is the profile. It gives all your personal information related to you and your credit report. You want to look at that and make sure that all that information is correct, because if there are any errors there, it could indicate there's been some identity fraud, or it could be just an error that got picked up by the credit, and that could tie information that's not yours. Then you have the derogatory summary. It just summarizes the negative items. Then you have the detail, where it shows all the accounts, good and bad, and all the detail related to those accounts. At the bottom, you have the public records. So public records would be if you had any tax liens, judgments, or bankruptcies in your past, they show up there. And, again, they do, if you have any of that stuff, it will impact your credit report. And those, again, can stay on for up to 10 years.
What about foreclosures?
Foreclosures are going to typically show up in the credit report in the detail. And one thing to keep in mind is that, because we've had it happen, we got a foreclosure removed from the credit report, and because when you close on a real estate transaction, they may do a title search, it may still show up if a title search is done. So it can, because it is public record out there, can be found in other ways, but it doesn't impact the credit score if it's not on the credit report. So it helps raise the score.
Okay, so what is in the public domain and what's on the credit score could be different.
Can be, and yes.
Okay.
Yes.
Well, John, thank you so much for coming to talk to us about credit repair issues. It's a very important issue in real estate when you are looking for a mortgage. And if you want to leave some takeaways with someone watching this video, what would those be?
I think one thing is it's important to know what your credit looks like. So I would recommend everyone, again, there's a lot of ways people scam us today, and I'm a big believer in having a credit monitoring service. So I would suggest you get one. I call it a cheap aspirin. I use it myself, and it saved me from having my own credit, my identity stolen a couple times in the last 5 years. Secondly, if you have negative items, don't stick your head in the sand. A lot of people who have credit problems feel like they can stick their head in the sand and it's going to go away. I've been there in my past, and it doesn't. It's going to continue to kind of be a setback until you actually address it. So either take that on yourself, or you might hire a company like ours. And then thirdly, credit affects everything in terms of how much you're going to pay for a credit card, an auto loan, a mortgage, and the real estate market in Charleston is incredible, and you want to be a homeowner, to be able to get that equity and to save money, because rents are more expensive than mortgages these days. So I would highly, highly suggest that you work on doing whatever you have to do so that you can buy a home in Charleston.
Okay. Well, thank you very much, John. So if people want to reach out to you, what's the best way of contacting you?
So we're available. We're located right here in Charleston. The best way to reach me was probably my cell phone, which I did give out to all my clients. That number's 843-568-5194. Or you can reach me at John Santos at secondsunrise.credit.
Okay, John, and do you have a website as well?
Yes, we do. You can find us at www.secondsunrisecredit.com, or you can certainly Google us.
Well, thank you very much, John, for coming to talk to us about credit repair. I hope this information was useful. This is Alan, and until the next one.